All right, family, so listen, y'all know I'm a fundamental investor at heart. And so whether I'm trading or whether I'm buying and holding, one of the most important things is to look at the financials of a company. I know a lot of people struggle with that as investors. So today what we're gonna do is we're gonna talk about one of the most key roles or key statements that you must look at as an investor. That's the income statement. Now we're gonna break this down into 3 different parts. We're gonna go balance sheet, we're gonna go cash flow statement, but today we're gonna really give you a look at an income statement so you can understand how to navigate, right? Because when you're looking at these statements, you're looking at all this line, that line. You like, bro, I don't even know what to look at. So we're gonna talk about is how this is read so that you can get a better idea. Now, if you really wanna get into it, you can check out my Wall Street trapping course, right? Because that's really gonna give you a thorough breakdown. So let's get into it. But before we go too deep, I want you to like and subscribe right now. What I want you to do is, as you're looking at this and you see something that's real good, I want you to tell us in the chat, how can we help you? How can we dig up it a little more? Because the goal is to help you navigate through this space with confidence so that you can build legacy and so that you can master the market. So when you saying Wall Street look like us now, you really mean it, man. So let's go, man. So the one thing we're gonna look at right now is the income. We're gonna look at the income statement. Now, when we're looking at the income statement, what I want you to understand is this income statement is talking to you or is expressing to you the measurement of profitability that's coming through this company through inflows and outflows. All right, that's what's here, right? So I want you to understand something. One of the things we're gonna look at first is, what this is gonna talk about is, let's talk about this, assets into the business, and watch this, measure of outflows, right? So you're gonna see some things because they all gonna look similar, income statement, cash flow statement, balance sheet, but there's gonna be some words that's real interchangeable, right? So I wrote something down right here, right, that I really want you to understand when it comes to looking at this, and I want you to see this. Watch this. Watch this. We're gonna write down this. Revenue minus expenses, watch this, and taxes, right? So this is one of the ways that we understand if a business is, watch this, profitable. But the income statement gonna tell us that. The income statement is going to take revenue, which is called top line. It's going to minus the expenses. That's why it's called income statement, because it's going to measure the revenue right here, which is considered one form of income. Income can also come from so many different ways. So it's going to measure income minus expenses plus taxes. Now we understand, right? Revenue minus income plus taxes. So income and taxes together minus revenue is going to give us what we like to call our profitability. And that is also called, watch this, watch what that's also called, bottom line. All right, it's called bottom line. So now when we're looking at the cash flow statement, the income statement, we want to read it from top to bottom. Top line gives us income, bottom line gives us profitability. Now, another thing I want you to write down is this. Watch this. Expenses, I wrote this down for y'all. Right, I wrote this down for y'all. Expenses and cash are subtracted, watch this, followed by taxes, but here's the most important part. The end result is the company's, watch this, net income, or, watch this, this is important, watch this. It is the result of the net income or profit, watch this, key word here, I'm gonna write this in black, before dividends. That's right, and watch this, dividends are considered, watch this, y'all gonna love it. Dividends are considered outflow. dividends are considered as an outflow. So why did I say that to you? Why did I bring that up to you? Because remember what we said here. We said that the income statement measures assets coming into the business and measures the outflow. Dividends are considered a outflow. Now watch this. I want you to know something. There's another metric that is measured when you're looking for what they have after dividends. So when you're looking at a balance, when you're looking at an income statement, you'll see, when you go on there, you'll see revenue, right? That'll be one line. And then they'll have the ways that the revenue is coming in. And then they'll have something that says total rev. That's of everything. So like if it's Apple, they'll have revenue. They'll have like iPhones. They'll have services. They'll have home. And then they'll have hardware, right? That's the revenue. But each one has a line item, and then it'll total them all up, and it'll say total revenue, right? And then it'll say expenses. Y'all know I wrote like a teacher just now. And then it'll show you what the expenses are. And then it'll have total expenses. And then it'll add that up. And then it'll have, watch this, net income. And that'll be what? It'll be revenue minus expenses plus taxes. And that'll give us our net income or profitability. But watch this. Before dividends. And so this is going to be important for us when we read now. Again, we got the Wall Street Trapping course that really goes in depth so you can really like navigate that. I'm walking you through it like screen share, right? But for the people that don't know, this is one of the main components when looking at a business. You want a business that has a great net income or profitability, right? Or you want to, when you want to look at it from a percentage perspective, oh, this is good right here. You're going to go from here to this. It's called net margin. You want that percentage to be, you want the higher percentage here, the higher you know how much of the revenue is profit. So you can look at some of the older videos because we talk about that. So a company that has a higher net margin tells us that more of the companies, so it says like if a company has $1 and it has a 50, then that means 50% of every revenue, of every dollar equals profit. That is crazy. There's some business like NVIDIA or something like that, right? But you got some businesses where like for every dollar they make, it is 20%. That's still really good, right? You got some businesses that it is 10%. That's solid, right? So the higher number of that net margin. So when you're looking at this, when you're looking at net income, watch this. When you're looking at net income, you're looking at it in a dollar amount. When you're looking at net margins, you're looking at it from a percentage. All right, man. So we just broke down that. Man, I love it. Definitely, we're going to talk about the cash flow statement and we're going to talk about the balance sheet. We got some videos coming, man. Let me know how you like this video. Get in the comments below. Talk to us about it. Our goal is to help you build legacy and feel confident when you're looking at the market. Also, man, telling you, comment "we trapping" on my Instagram, Wall_Street_Trapper. You'll get that Wall Street Trapping course. Yo, I'm telling you, it is a game changer for sure. So man, I love y'all. I appreciate y'all. Make sure you like, make sure you subscribe. Also, make sure that the people in here that's telling you I do live coaching, that ain't me. Make sure you're not going to nobody WhatsApp, that ain't me. Watch all the fake Instagram pages. I have about 1.5 million people. I got the blue check. I do not have none of those backup pages. They lying to you. That ain't me, right? Go follow me on Instagram if you're not, but also don't get scammed out here, man. It's your boy, the Wall Street Trapper, man. I love y'all and I'm out.